Hey everybody, welcome to Trading Capital's Daily Analysis video. Today is currently October 18th, as we have a lot to discuss in this wrap-up. I'm going to start with the S&P 500. The overall S&P 500 finished down today minus 1.33, a big sell-off today via this daily red candle on 92.72 million shares of volume. Obviously, there's going to be more volume floating in the after hours because of the fact that we have two big companies reporting earnings, Tesla and Netflix. And overall, what I want to bring to your attention is despite the big down day and getting rejected at this head and shoulders neckline intraday, this pattern is still technically okay to, I believe, move a little bit higher, especially with what has happened after hours with Tesla and Netflix so far. So overall, looking at the QQQ, the Qs got absolutely slaughtered today. Let me just remove some of these drawings. You can see the Qs finished down 1.31%. Also on 53.7 million shares of volume, so really tapping that 20-day volume trend. Now, the Qs, I believe, are a little bit more bullish and remain bullish compared to some of the indices, but still got absolutely slaughtered. The IWM, lots to consider here as the fact that you're still below this key trend line here. As long as you're below this is all forming bearish consolidation, but you're still very, very oversold, and you do have this multi-week support range, which could provide a bounce at least to the top end of this range. That's kind of my overall expectations. If you just look at this chart simply, you do have this bearish head and shoulders pattern that triggered and is almost played out to the downside, but you do still have some 164 level to the downside. Now, since you are at some multi-week supports here, this does not mean it has to trade all the way down. So I repeat, but the more you consolidate, more so on the weekly time frame here with a few more weeks of consolidation, the more it does shape up to be a little bit of a flusher to the downside. But the big level is obviously this daily hammer candle. That is your reversal, which you have not taken out on a daily close as of yet. So this pattern still is okay, and you are forming some daily higher lows to potentially move a little bit higher. All right, what can we discuss after the hours? The markets are probably going to be ripping tomorrow. Why? Look at Tesla. Tesla had that big flush down, so I'm just going to remove some of these drawings again. One thing I want you to pay attention to is Tesla pierced and broke this downtrending trend line, or that upsloping trend line today on a daily close of 114 million. Bearish breakdown, all for it to basically start popping back up in the after hours on earnings. If you look at Tesla in the extended hours, Tesla is actually significantly trending much higher. Take a look at that. It made a low of 235. Let's just mark this on the chart. It made a low of about 235.97 there, and it's off of that low substantially. I actually was live trading Tesla today and Nvidia on my Twitter and TradingView platform, and I called out 245 calls for Tesla when we were trading really somewhere down this 241 level. And I live called 245 calls, and they are in the freaking money. Beautiful, baby. I also picked up some common shares on the live trading shares, and as well as in the earnings after hours, which I banked on both. So beautiful job to see that Tesla is trying to recapture this trend line. Overall, this is still technically bearish. They did miss on earnings, but why are they popping? They are popping because they've just announced the Cybertruck release date. So they're going to be releasing Cybertruck soon, which is yet again another revenue stream and another vehicle on the road, which is a very strong positive for the stock. Now, if you look at the earnings, it only reported 66 cents per share, reported revenue of 23.35 billion. So definitely a miss, but can the Cybertruck positive news and Elon Musk conference call hold this price action a little bit higher? Time will tell, but you can see it's right at that neckline. It's just so funny how price action works. As long as you're trading below this neckline, you do have a tendency to actually retest the low that it just made down here. This was the low it made, 236, really matched up with this pivot, almost this hammer reversal pivot zone that traded on substantial volume. But needless to say, definitely a positive rally for the overall Tesla chart there. And if you look at the Qs, it has significantly lifted the Qs. You know, the Qs closed at 363 and they're trading to about 364.20. What's another positive news for the market? Look at this, Netflix. Netflix getting absolutely slaughtered. It reported earnings today, smashed it out of the ballpark, and take a look at what it just did. Flip to the 8-hour chart, boom, into resistance here, but this is still holding very positive. That's a big move up for Netflix, and you can definitely say there might be some positive carry through tomorrow. 12% rally for two big stocks is certainly going to lift the sentiment in this market tomorrow, and I expect a rally. Look at that bottoming tail on Tesla, and it just continues to climb and climb and climb. And again, if this carries its momentum forward, it's going to certainly lift the markets tomorrow tremendously, and I'm waiting for a bull market rally that could eventually cause this pattern. You still have this left shoulder, head, right shoulder development. This is a very large pattern on Tesla that if it breaks to the upside, we're talking about a move of 346 on the charts. That would be a stellar move. And right now, with the biggest hiccup basically out of the way and it's trending higher, it's looking very positive to maybe even break and cause this neckline breakout. Obviously, we have a ton of other mega cap tech earnings which could sway the inevitable trajectory, but it's looking absolutely positive after today's price action in the after hours, as long as it doesn't give it up. Because as long as you still recapture this trend line, you're okay to form this right shoulder of your inverse head and shoulders pattern. All right, let's flip through some other stocks. Nvidia is hitting a big support. Nvidia, sorry, let me just type correctly. Nvidia getting absolutely demolished. I was also day trading this, and you can see that. Let me just remove these drawings. You can see Nvidia has two key trend lines. Boom, tag that one on heavy volume. Look at this move down from 476 to 421. You know, I believe it's the fifth largest company, down about 12-13% in 1, 2, 3, 4 days. That's a big drop, and you are hitting support, so you would naturally favor a bounce, especially after the positive earnings. Now, there is the actual head and shoulders neckline, which is here, that you could see a little bit more selling before you get that bounce, but you are into some pretty decent levels on Nvidia right now, and you have to favor a potential bounce to the upside, at least off of this level. We closed at 421.96. We're trading at 423.14, definitely helping the cues on the back of the Tesla and Netflix earnings. So it'll be interesting to see if Nvidia holds this level or if it actually breaks it. Obviously, the head and shoulders is only really entertained until we get a daily close below this neckline. Until you get that, this pattern is at support and you should favor a bounce. RSI, you know, it's not that oversold, 39.80, but again, you could also be potentially putting in this inverted head and shoulders on the RSI. And again, if that were to break to the upside, you could see Nvidia probably at like 520, 530 in the coming sessions. What I'm looking at in Nvidia is this key parallel channel as well, which you're also at. So along with this support trend line that we tagged today, this is a big parallel channel that I'm watching, and I think that it's going to help yield a bounce on Nvidia. Full disclosure, I did pick up some day trading shares as well, which is seen on my other TradingView stream. So definitely play this cautiously, because if this level breaks, then there's potentially a lot of downside. You'll probably get a bounce at 403, maybe even this pivot. But again, this downside break of this potential topping formation could send you much lower on the charts. And we obviously know there's that massive earnings gap that everybody is waiting for. Maybe it's a gap to the downside. Who the heck knows at this point in time, but it is at technical support as we speak. All right, let me just go through a couple of things. Let me flip to the yield market. So we had a big 10 or 20-year treasury, 10-year yield 4.91% and looking to break out on the daily chart. This is exceptionally bearish for the overall market. Why? Because it means inflation is becoming more entrenched, yields are going higher, cost of capital is increasing. Naturally, that puts a strain on the equity valuations in the stock market. US 2-year yield also closing up to 5.22%. It's slowly, inevitably closing in the gap between the Fed fund rate and the overall 2-year yield market. Fed funds at 5.5, 2-year yields at 5.2. Watch the inversion. If the 10-year yield gets above the 2-year yield, that's where I think we have a big equity sell-off. Now, there's a reason why the stock market could also go higher with yields going higher, is because it's inflation. Inflated earnings, inflating stock prices, it could push higher in the near term, considering the markets have had a decent sell-off. The VIX got a pretty big bounce today. It is still forming that inverse head and shoulders, so time will tell if this breaks out. If this breaks out, market selling off. Big time to the downside. Let's move along to the oil and gold market. So starting off with gold, gold is pricing in some sort of fear-based event. Perhaps the VIX is about to break out. Gold got a whopping 1.34% rally, closing up into some triple top resistance here. Definitely some big resistance points. I would favor a pullback in gold. I was contemplating shorting gold today, but maybe you get one more kind of blow off move into this 1985 level, 1986. If we got another little pop tomorrow in gold, I would look for a day trade short, maybe even on the minor side. If you look at the GDX was weak, kind of showing a little bit of reversal in the weak market despite gold holding up very well. So a little bit of a negative divergence there, which typically means that maybe the actual underlying commodity is just moving on fear and instead of the speculation side of the gold market. Let's move along to the dollar chart. So DXY also had a big rally today. So lots of interesting stuff to talk about on the dollar. Overall, dollar has recaptured this trend that I've been watching. It's a very powerful trend. You can see the dollar basically closing at that key level today. What's important about that is this dollar's putting in a micro bull flag as well as an inverted head and shoulders. I like to use the 4-hour chart for this specific pattern, show you interestingly what is occurring here. So you have your left shoulder, you have your head, you have your right shoulder. What is going to break out? Is it going to be these inverse head and shoulders in the Qs and the Tesla charts, or is it going to be the dollar chart? If this dollar head and shoulders breaks out, that's going to be very detrimental to emerging markets and the overall S&P 500 as a whole. It means the dollar moves to 107.95. That's a troublesome spot. I am seeing Tesla in the after hours selling off just a tad, getting rejected, that neckline coming back down to 244. So just pay attention to that. But the dollar is technically at this resistance. It's had 1, 2, 3, 4 green 4-hour candles in a row. It is putting in consolidation, but this is a big level. It's kind of the do or die for the overall dollar index right now, because if it gets rejected at this level, then I do think there's a big chance that you follow the downtrend of this trend line. Let me just remove this. There's a parallel channel that I want you to watch intraday. If you take the high to that low and you drop it down, you can see that this is the channel that we've been ping-ponging. High to a low to a high. You're retesting this high. If you lose this high and get rejected, the dollar's likely going to test this 105 area again, which would actually align with the bullish patterns that we're seeing in some of the tech stocks. Some tech stocks, I believe, can actually move higher, which is why I think the dollar may get rejected at this level and trend a little bit lower. Let's move along to natural gas and oil. So natural gas on the daily chart, it was interesting. I did day trade this morning, but natural gas on the daily chart, trying to make a breakout, getting rejected at the short-term 7-day moving average, and then selling off and basically closing back inside yesterday's candle. Now it did finish up 1%, but that's a pretty big hard reversal. Lots of chop and slop on nat gas. You do have a potential breakout of this little inverse head and shoulders in the hourly, but you got a candle close below it, you got one candle above it. You really need to see some more positive price action on natural gas. I still have it priced in that at the minimum, natural gas has to retest this previous upsloping trend line, or I would much prefer it if natural gas got a washout retest back down to this 304 level. That's kind of your stage 1 basing high level on nat gas, where I think if it got a retrace there, I would absolutely start accumulating on the long side once again. Full disclosure, I sold most of my nat gas positions and shorted at the highs, and I've definitely not holding any exposure on the long or short side at this point in time. WTI crude oil had another little breakout today. Despite the dollar being strong, oil was also up 0.88%. It's looking to close above yesterday's or the 2 days ago selling high over here. So that's a short-term positive for oil. Oil right now is potentially on watch for a rounding shoulder. The big level for oil, I think if you get a red bar close, a daily close above this red bar high, the high is sitting at 88.47, then I do think that oil can actually have a very decent rally back up to this 94.15 level. And that would not be good for the stock market. That would not be good for inflation. And maybe that's what the interest rates in the bond market is also pricing in, with the potential daily high close in the bond markets. You also got a daily high close in the oil market. So again, maybe these things kind of correlate and go hand in hand. Time will certainly tell. All right, let's move along to some other interesting price action. I believe that's actually it for today. I'm going to end this video here. I'll go through some individual stocks. Actually, Bitcoin. How could I forget about the beloved Bitcoin? So let me just pull up the Bitcoin chart here so we can dissect it and go through, Bitcoin is still looking a little bit more bullish in my opinion. So Bitcoin had that initial spike move up on the spot ETF announcement, and that announcement came to pass that it was actually fake. Bitcoin's actually holding most of the gains that it, even despite that news being fake. So what that's telling me is that there was a fundamental move that shot it up, became a little bit overzealous, but there's also maybe a little bit of a technical move that is holding Bitcoin's price action up. If you look at Bitcoin, Bitcoin has now recaptured, and for 3 days now, holding the daily 200 MA. Notice what's different about this time. In this bearish consolidation structure, we got rejected at the 200 moving average there on day 1, 2, 3, sell-off. We got rejected at the moving average on day 2, as well as a few other days here. Now, this is the longest time that we're spending above the daily 200 in this little bearish consolidation range. So when I notice little positive relative strengths like that we're holding above the daily 200 for the longest time, since we've been putting in this bearish sideways consolidation, maybe there's a little bit of a short-term trend change that could pop Bitcoin to the high end of its wedge pattern, call it 32.4. That would also align with the overall price action in the dollar getting rejected and heading a little bit lower to the downside. So pay close attention. I do like coin in terms of trying to pick up a little bit of price action here. I did pick up a little bit of coin at that $74 level today on the sell-off today. Very, very small position. Obviously, we have to be mindful that coin is still trading. Really, this is the big level I'm watching, this wide range impulse green candle. Let me actually just change that just to identify exactly where we're trading. So 73.19 is a massive level on the daily chart. The weekly chart as well, because it has a heavy degree of volume. But that is a big level. That's your impulse green candle that broke out on news, and you've just been consolidating in this very tight range on Coinbase. What's the line in the sand for Coinbase? Well, I think if you were to break this key trend line, this upsloping trend line, get a daily close below that, you simply stop out of the trade. Now, as long as you hold above this 73.19, it remains intact, very bullish. And one thing is also, this is not a very clear inverse, but you are potentially also forming this inverse head and shoulders on the daily chart, and it would align with Bitcoin trying to potentially break out. Now, where would the upside move in Coinbase take you? You know, on the charts, you're looking at a potential move of about 91.68 on coin, and that would align with, let's just throw a fib retrace of this whole market move. Look at that. That would take you to roughly a 50% retrace of this whole downtrend move. The daily 200 is starting to upslope, which means that the trend, the longer medium-term trend, is in favor for a continuation to the upside. Let's just look where the 50-day is. You're below the 50. You've been rejected at the 50 once, twice, 3 times, 4 times, and this is becoming a very tight wedge, but the overall long-term trend is starting to shape up, and maybe we get a little bit more of a positive bullish move in the crypto space, just in the near term. Very brief. You know, we're just trading quick in and out moves here. Overall, thank you all for tuning in. Please give this video a big like down below and stay tuned for more insights. Definitely visit tradingcapital.ca if you're looking to see how I'm trading this earnings report, because we have a whole host of more stocks coming up in